We see really three key challenges at the moment. First of all, move to a more normal interest rate environment and some of the central banks removing some of their extraordinary measures. There'll be a downward pressure on bond returns with the yields moving up and also a reduction in equity prices. Secondly, we look at valuations across many asset classes and we see them at or above historical averages. This also therefore means that cash is really not producing any suitable return, making the asset allocation process quite challenging for businesses, and even some risk-free assets or traditional risk-free assets are seen as somewhat risky. And thirdly, perhaps one of the biggest unknowns is the political backdrop. The geopolitical uncertainty that's everywhere. Here in the UK, we've got the Brexit risk out there. We've got the US Trump administration, perhaps bringing a volatility that none of us really know where it's going to go, as well as some geopolitical unrest in very many other parts of the world. We don't really see a requirement to shift into new asset classes. Now, what we've seen over the past decade with a low yield environment is a shift into riskier assets. We've definitely seen that across most of the sector. Now, we ourselves have also done that, but currently we are very happy with our current strategic asset allocation. We've got about 13% in risky assets, risk assets. We've got 60% in fixed interest, government bonds, and 27% in cash and other assets. And we feel comfortable with that. So we don't see a need, certainly for the Lloyd's market, to have to shift. We've seen a change in what's happening in the risk pools. We've got new catastrophe facilities opening up, but we're also seeing some disaggregation, such as insurance-linked securities. And if we think about what's going to be happening in London, hopefully in the fall of 2017, with the ILS market opening up, it's still got to go through Parliament and get agreed. But with that opening up, that's some further disaggregation. So I think on balance, probably more disaggregation than anything else.